Very good afternoon, all members of prestigious institute, the Institute of Chartered Accountants of India. I am your moderator of the today's webinar, CA Nitin Jalan from Jaipur, and I am giving brief profile of CA Ajay R. Vaswani ji, who is delivering us a session on creating opportunity in NRI taxation and compliances. Now we are welcoming NRI taxation and compliance lead by CA R. Vadwani ji, a distinguished professional in the field of chartered accountancy with a solid foundation in both commerce and law. Ajay stands as a beacon of expertise and proficiency in his domain. Qualification of CA Ajay Vadwani is he is a fellow chartered accountant from ICAI and lieutenant company secretary from ICAI and have a comprehensive understanding of corporate governance and compliances. Ajay ji academic journey is marked in a dual graduation in commerce and law from a prestigious college from Nagpur University. He is specialized in NRI taxation and FEMA regulations. Now we are asking to CA Ajay sir to please give a brief about his journey and then start today's session. Over to Ajay sir.
Thank you so much, Nitin sir, for this introduction and welcome. And at the foremost, I would like to thank Honorable President sir, Vice President sir, who are leading us at the helm of the affairs of the Institute. And I'm equally thankful to the Chairman and Vice Chairman of the CMP committee and the members of the committee for giving me this opportunity to come on this platform and share about this think global and practice local concept, which have been coined. And of course, what we are talking to today is NRI taxation as an opportunity, as a growth strategy for the members in practice to see as one of the area where they can work upon, where they can grow upon, and which can be included in apart from the traditional practice what they have been doing. So before we start, I would like to know in the chat box how many of the members are less than 3 years in practice. So if you are less than in 3 years in practice, I would request you to just drop in chat box yes message. So we'll make this session more of an interactive one instead of just having a one-way communication. So can I see some yes from the members who are less than 3 years in practice?
So they cannot write in chat box. We have
So you have disabled the
none of
option.
Yes, sir.
Okay. So it has to be one-way communication only throughout.
Yes.
Okay, all right. So this, of course, the reason I'm asking is the members. Of course, this is an opportunity which can be done in practice by everyone, but considering the option, the young ones are coming into the practice, so the percentage is very less, and major of them go into the industry. This is a very good area that you should look upon. And as Nitinji requested, I will give you a quick brief what exactly I have been doing, how I started this journey, and then we, of course, come on the agenda point. So I qualified as a chartered accountant and company secretary both in 2012. And I was always of the opinion. So being a first generation chartered accountant, I had no one in far in my family to be a chartered accountant again. So coming from a family where there are doctors and businessmen, so I was like of the opinion I want to get into the practice. I don't want to get into the industry or into the corporate. So given the option, of course, I had the choice that set up an office and go into the traditional area of practice and do everything what exactly most of us do. And being into the articleship or traditional firm again at an Nagpur, which is a tier 3 city. So of course, my exposure in articleship was again more of the taxation, accounting, auditing, and all these general regular things which we practice upon. But considering the thought that it would be very difficult to have a practice being set up because competition is always there. considering Nagpur is not a very big place, that there are a lot of industries, new industries coming in. So getting the new clientele is also a very difficult aspect to be seen as a chartered accountant, as a budding practitioner. So that was always there. If I get into the practice, the gestation period would be not less than 4 5 years, and that was bothering me. So I planned a trip to UAE. That was more of a personal and a trip which I went there to see what are the opportunities around, what people are doing. It was in 2012 I went there. So while interacting with a few references I had, of course, they were non-resident Indians who were settled in UAE for 10, 20, 30 years. While interacting with them, the moment you introduce yourself, okay, I am Ajay Vaswani, I am chartered accountant, they pose some questions to you. So same happened with me. So the moment I introduced myself as a chartered accountant, they gave in some questions to me, which of course I did answer at that moment of time. But somewhere in the back of the mind, I was like, why these basic question? वो जो मेरे से उन्होंने क्वेश्चन पूछे वो इतने बेसिक थे. Usually, you don't get to hear the same kind of questions when you are in India and you are interacting with any resident individual. I will give you one of the question. सर मेरे को इंटरेस्ट मिलता है मेरे एनआरआई अकाउंट पे, उस पे मेरा 30% टीडीएस कट जाता है और वो पूरा मैं टैक्स मैं गवर्नमेंट को दे रहा हूँ. So the basic understanding of the TDS and the certain tax liability was also not there. And especially they were in a country where there is no tax as such. So as on date also there is no personal income tax in UAE. Whatever they earn is exempt for them. So they are not really very used to the concept of paying taxes, filing income tax return. And especially you are living outside India for 2 3 years, you forget what's happening back in India. You are away from the do's and don'ts, the compliances and everything. So that is the reason they are more ignorant and such basic questions come in. So after answering, I came back. This thought was continuously coming into the mind. When people, an example, if I have to take an individual who has a crore worth of fixed deposit in his NRO account, and given the option there is a 6% interest. So on an average, he gets a 6 lakh interest on that 30%, which is 1,80,000 TDS is being deducted, and that individual is absolutely not aware, he is clueless that this money he can claim back by filing his income tax return after the ascertainment of the taxes is done. So given the option, we compute what would be the tax liability for that individual having just a 6 lakh interest would be hardly 15 20,000 rupees. The moment he files his return, he would be eligible to get a refund which is not less than 150,000 rupees. So if I get into that, I give him this refund, he would be more than happy to get it this opportunity done and appoint me as a chartered accountant. So I thought that let me see this area as a practice. Of course, in 2012, NRI taxation was not much of a subject also. And people who qualified before 16 17, in fact, in our direct tax course in the CA final level, the component of questions coming in from international tax also was very less. So of late, Institute has also realized this is an upcoming opportunity area. So they introduced a elective subject and they made it mandatory for 30 marks in the CA final direct tax. There is an international tax course also. So of late, of course, it has been, but way back in 2012, this was not a very good area to be practiced upon. So I came back. In fact, I had studied NRI taxation much more than that my CA final direct tax. And it was almost 5 6 months I did this study. And then I went back with being a thorough qualified professional who can say that I have a very good study in this subject. And then I started going there, meeting people, educating them what are the do's and don'ts. So it was more of a one-to-one interaction with the people through the references I was getting. What I was doing is I was educating them. The moment they were educated, they were of the opinion, yes, I want to be compliant in India. I want to do the taxes. They were aware now of the advantages that they should see upon filing their income tax returns in India. So this is how my practice started, and now it's been 13 years. I have traveled various geographies every month. What I, as on date, also I spend is 10 to 15 days I spend outside India. So major being again UAE, Gulf countries, Singapore, Hong Kong, and then plus considering post COVID, the world has come closer with the presence of these online tools. So I can take my seminars through the Zoom platform like we are interacting today. So I have been doing that in US, UK, Australia, then Europe countries, Germany I have been doing. So every you name a country where is that non-residents are not there. So considering that exposure, I am given the opportunity today. So the concept here would be today to make you aware what is NRI taxation as a practice area. So we would be revolving around that. We are not going into the technicals part today because that will change the entire objective of the session today. So we'll talk about the strategies. We will talk about how you can develop this as an area of practice, what you should be doing upon, what you should specialize upon, so considering that you want to get into this area of practice, and what are the technologies that you need to adopt, what are the ways you can reach out, and the strategy to, of course, number one is to attract NRI clients, and second is to retain them. So that is again a very equivalent thing that you need to do. And of course, how to be updated and what are the rules and regulations, what are the things around. And when I say NRI, so my focus has always been on a resident NRI on an individual part. We are not talking much about the corporate today. My focus has been on the non-resident individual who are living abroad. So what we would do, we will break up the agenda on the overview first, and then what are the opportunities. And after the fag end of the presentation, we will open the session for the Q&A part. Okay. So it's been 75 years that institute has been there. 1949, it was incorporated. Over the years, if you see, primarily after qualifying as a chartered accountant, what are the opportunities we have? So either we get into the corporate, that is a 9 to 6 job we can call for, or you have your own consultation firm, you set up your own practice wherein you directly consult the clients. Given the option, what are the opportunities you have if you get into the corporate world? So either you get into an industry which is into the manufacturing, IT, automotive, finance, and more or related. The roles that you can play is either a CFO or manager finance, finance controller, internal audit, or a tax consultant. So these are the primary area where individuals work in the industry. Second is either you can get into the big four, the multinational firm, or the CA firms who are big enough where you get an exposure where of course you are a little part of the traditional practice, but you are more into the corporate culture there. And of course, third major recruiter for the chartered accountants is the banking and the financial services, where you can work into the multiple domains. The next is, of course, the practice. The reason we are today, the committee of members in practice has taken this initiative to empower the members on the new and the upcoming areas of practice, how they can develop upon, how they can be the resource to empowering the members. So primarily, what are the ways we can carry our practices? Number one is, of course, you can be a sole proprietor. You can establish your own firm. If you look for more collaboration, more area of practice, you get into the partnership firm. And to corporatize the same, we get into the LLP or into the private limited company, which is into consultation. So this is how we have been practicing upon. And of late, especially after the COVID, the world has become very small comparatively. The India story, everyone is talking about how the growth is there, the economy is booming. We are going to be soon a $5 trillion economy. Considering the boom, there are a lot of opportunities which has come upon. So if we talk about the conventional practice, of course, these are the bread and butter for us as a practicing chartered accountant, which has always been the key in area. So 90% of the firm you visit in India, you will see these activities being carried out, which would be auditing, assurance, taxation, your accounting, corporate finance, insolvency, bankruptcy, and internal audit. But coming to the non-conventional and which has grown a lot in recent years are like cyber security, international taxation, forensic accounting, M&A, investment banking, and of course, risk management. Two of these areas are very prominent, coming to the fact that youngsters, the newly qualified chartered accountants who want to get into the practice and a non-conventional practice are opting for. One is international taxation and second is risk management. And perhaps this is the reason why these two subjects are also added in the CA curriculum as an elective subject in the CA final. So the paper number 6, which used to be there, of course, now the regulation, the new syllabus is there. But these two subjects are very good focus upon at the institute level also. And this is a good step that institute is also recognizing and training the budding chartered accountants on these two aspects. And considering our subject area is international taxation today, so we need to understand first of all the fact why there is a rise in this practice area. And this is because the non-resident Indian based out of India who are moving abroad have also seen a tremendous growth. And what are the reasons for this growth is, of course, the economic globalization is there. There is an increase in the international trade. India is signing MOU with multiple countries. There are free trade agreements happening. Indian firms are being set up outside India. So there is recruitment happening. There is Indians who are being moved abroad. So there is relocation of the employees. So this has also led to globalization of the labor market. And of course, the multinational that you see have been rising from India. They have a global presence. They are moving their staff base, who eventually become non-resident Indian. So one is a very basic factor, which is of course a globalization of the economy. Second is, of course, this has been for years, which is an educational opportunity. So a lot of young people nowadays prefer their post-graduation or even for that matter, graduation into the foreign universities. So they travel abroad, the Western countries, US, UK, Canada, Australia. So these are very good countries for the further education. So the moment the people are educated, they graduate from these university and colleges, they have an habit of staying back there. So they don't really very come back to India and they are looking for prospects in the foreign country. So once they are based there, again, they are become a non-resident Indian. Employment opportunities, of course, there is a very good demand abroad for the nations we talk about. The countries like US, UK, UAE for that matter, Singapore, Hong Kong have a very good recruitment from the Indian countries, Indian people. Of course, the job prospects are very good. The salaries you get is very good. The another aspect is improved quality of life. So recently I was reading an article where maximum millionaires are moving to UAE. So what is the reason now? So of course, one is a better healthcare, good education, the infra, the standard of living is comparatively good. So that is one of the reason which is attracting the people to move abroad. So this also leads to the increase in the NRI population. So the global diaspora is increasing basically with the communities being developed. An individual gets settled over there for 5 10 years, they call upon their second generation, maybe their family members are moved. So these all consideration, these all points are leading to the increasing population of the expats around the world from India. You name a country where Indians are not there, you go to any country, especially if you are in the UAE or Singapore or US or Canada, everywhere you see a very good population. One of the highest population across in these countries is that of Indians. So everywhere you see a non-resident Indian, you name a country. So this is why the reason we are talking, the moment NRI population is increasing, the practice area for to develop as an NRI taxation is also developing at the same time, because there is a new population, there is a new business, there is a new individual who can be your prospective client. It is not that it is stagnant, the industry is same, the population is more or less same. So the more the migrating crowd, the more people who become resident to non-resident, that is how the practice area can see also the growth, and which is always on the upper side. If you see the strategy, the number of years in you put in. So what are the opportunities where you can leverage your global presence in the NRI taxation? So of course, you see global investments happening. So if an individual who is living abroad, so an individual who goes to London and settles down, so he would be having a salary income over there. So what does he does with the income which is left over, or he has spare income to dispose of? So he looks for investment opportunity. For a non-resident Indian, investment opportunity can be classified into the two parts. One is a forex currency based investment opportunity, and second is INR based. So of course, being there, he would buy a house, buy some local investment over there. But somewhat the comfort zone that an individual who has an Indian connection, has the roots in India, the comfort zone for him would be to invest in India, to invest in the Indian market. So for an NRI, there are two types of investment happening. One is into the foreign and second is into the India part. So this is what happening is there is a investment happening in India. So any resident, any NRI who has an investment in India, so what kind of investment it would be? One would be, of course, either in an immobile property. So you see a lot of NRI buying real estate in India, residential, commercial, or your NA lands, and then commercial complexes are being developed. So what is their objective is, of course, capital appreciation, and second is a rental income. So the moment you have a rental income, it is taxable in India, and that is where the NRI taxation comes into. Then people are putting the money into the movable asset, into the equity, your debentures, your bonds, mutual funds. So the moment money is coming into India, there is a taxation, there is a compliance to be done. That is where the NRI taxation comes into picture. For people who move back outside India for good, out of the inheritance, they are getting the assets. The moment inheritance is happening, they sell off the asset down the line. There is a capital gain happening. Then NRI taxation is coming in. There is a lot of investments happening from abroad into the Indian startup ecosystem. So the opportunities are being created in that scenario also. Mergers and acquisitions are happening. There is, so I was talking only about the individual part. There is corporate angle to it. Foreign subsidiaries are being established, or subsidiaries are incorporated in India for the foreign companies. So cross-border transactions are happening, merger and acquisitions are happening. That is where another opportunity is being created upon. So this globalization, what is happening is there are multiple angles to be seen. What is one of them is the double taxation avoidance agreement. So as on date, India has close to, I think, 90 countries where they have an agreement. So you need to be an expert in those, understanding the double tax avoidance agreements. So there are very complex treaties at times. The second area is international tax planning, how the structure should happen. If an individual is moving outside India, when he should move. If an individual is coming back to India, relocating post retirement, when he should. So, what is your residential status? You can structure upon. You are resident, you are non-resident, you are RNOR, when it should happen, where is your optimum tax structure. So, this is one of the area where it has seen a lot of involvement around this practice area. And it is very important, if you are looking this area as a practice area, you have to be abreast with the changes happening, the new treaties that are happening, what are the amendments happening around the world. So this is one gray area where you have to be very careful upon. What areas a chartered accountant can practice, considering we are talking about the individual NRI taxation? So number one is, the basic question comes in, what is my residential status? So any individual who is moving from India for the very first time, the question comes in, what is my residential status? When should I move? So you should have a very good study with regards to the Income Tax Act and as far as the FEMA rules, because these both rules are to be seen for your residential status and the banking provision. So you should have a very good study on this subject. This is the basic step that you can start upon to incorporate, to start upon your practice as an NRI tax consultant. Second, for the individuals who have income in India, so compliance practice comes in. It is very important for them to file income tax return in India if they have a mandatory uh, structure where it is required for them to file the tax return. Of course, an individual. So see, there are five major heads if we talk upon. Salary and business and profession are very less comparatively if we see. Very few actually have a continuing salary income in India, and or maybe for that reason, business or professional receipt. But the next three major heads of income that we have, every NRI has some or the other connection. So if you have investment in movable, immovable property, there is a capital gain. If you have a house property in India, so rental income is coming. If not these four, I'm sure people have their money in their NRO and NRE bank accounts in India. They have some investments where interest is coming. So then there is income from other sources. So some or the other income is there for sure for a non-resident Indian. And if it, of course, crosses the threshold limit, it is mandatory for them to file income tax return in India. So if I have to give you a basic example, so at times if you see any non-resident who comes to you and says that, okay, I just have nominal interest income of say 30,000 rupees, should I be filing income tax return here? So the, of course, Income Tax Act doesn't require that individual to file the income tax return in India. But given the option, now if you look from the another angle, not only from the income tax or the FEMA perspective, what advantages that individual may have if he files his income tax return in India. So number one, income tax return in India is only document which substantiates his residential status and the tax liability he has in India. So there is no other document where he can substantiate or declare to the government that this is my Indian income and this is my residential status. And of course, government of India doesn't charge anything from him. Of course, there would be a fee that he would pay to us as a professional, but keeping that aside, there is directly no cost attached for filing the income tax return in India. So he gets one document which says he is a resident of so and so country and has this income. So it is always good for him to have one document which substantiates his residential status. And this is more relevant specifically for people in UAE, for the reason there is no taxation. They are not filing any income tax return in the UAE. If they are not filing any tax return in India also, so it is practically seen that they are not compliant of tax laws in any of the country. They don't have even a single document which says you are what is your residential status or what is your global income. And what we suggest to our all clients based out of Gulf is you can always include your foreign exempt income in the Indian income tax return. This helps in building the capital. So what I have done is I have created a reason for them to be compliant in India by filing the income tax return. So what is happening is eventually we are increasing the customer base, client base for us eventually, and where they are also being benefited. The second benefit is, of course, for a non-resident Indian, the TDS is always on the higher side. Be it Section 195, if you have an interest income, 30% TDS is there. If you are selling a property, TDS is always at a higher rate. The moment you file your income tax return and your income is below the exemption limit, you are eligible for the refund. So the example I gave for the fixed deposit, an individual, if you go and say that, okay, if you have a TDS of 1,80,000, I will file your return and get you 1,50,000 back. Who is saying no for that reason? There is no one who would say no. Only thing that you have to do is create an awareness on the same. I have hardly met an NRI who regularly goes into the tax portal, has his profile updated, goes and check the 26AS, even 26AS, unless and until you are registered an NRI on the traces portal, you cannot access your 26AS also. So people are absolutely clueless what is their income in India, what is the TDS. So what you can encourage upon is in your circle, whatever non-residents you have, you ask them to at least log into your tax portal and see what is the TDS being deducted. So you compute what is the refund they can get by filing the tax return. You educate them and you get a client. So this is how the potential clientele base is being developed for the non-resident taxation. The real estate is, of course, very complicated. I have a dedicated site where we would be talking about the taxation around the real estate. That is one area. So real estate has been one of the very good investment happening, and people are passionate about putting the money into the real estate. So the moment money is poured into the real estate, that is fine. But when the real estate is being sell off, that is where the complexity comes in. Not only just because a lot of capital is involved for a non-resident Indian, but the taxation, the TDS, the provisions are little complicated. That is one area where you can evolve and be the help to the rescue of non-resident Indian. Remittance and repatriation. Of course, if I am a non-resident Indian living outside India, if I am putting the money in India, tomorrow I want to get it back. A lot of remittances, a lot of repatriations are happening. There is compliance that needs to be done. If any money has to be taken outside India, there is a $1 million scheme wherein your Form 15C and Form 15CB is required. So that is another area of practice. That is another area of revenue that you can get. So what you have to be kept updated about is the evolving tax regulation. Every year there are hundreds of amendments happening. What are the key amendment? What are the effectiveness to the non-resident rules and regulation? You have to be very sure on that part. Recently on 23rd July 24, when the budget was presented, so indexation benefit when it was removed, and then a lot of hue and cry was there. There was representations around, and then government came in and said, okay, we will roll back. But at that moment, the rollback was only for resident. So if you see, non-resident community was removed from that. So that led to a lot of creation of confusion around. So being a resident, you have two options. Either you go with the old regime and calculate tax as per the 20% with indexation, or you opt for the new regime and you pay 12.5%. But considering the NRI, so the TDS here on the non-resident selling a property in India as per Section 195 is the rate of the long-term capital gain. So earlier tax was to be paid at 20%. So TDS was also 20% on the sale value. But that change has also led to the confusion. Now since you have an only option that you have to pay 12.5% tax flat on the capital gain for a non-resident Indian, TDS rate is also 12.5%. Of course, surcharge and education cess is to be added. But a lot of chartered accountants are also of the confusion here now that TDS is to be done at 20% and tax is to be paid at 12.5%. So this is not the scenario. The factual scenario is TDS is also 12.5%. And of course, there is an opportunity where you can apply for a lower TDS. There is a Form 13. So we'll talk about that also as an opportunity. Lot of changes are happening. There are interpretations to the double tax avoidance agreement. Digitization is happening. Post-COVID, everyone has seen how income tax department has also been very proactive. Lot of litigations have increased. Lot of notices are being sent to the non-resident Indian. And so, of course, they are living outside India. Their homes here are locked. No physical communication is being received by them. Lot of NRI have still not created their tax profile, or even if it is created, their email ID, phone number is of way back when they were resident. They don't have access to those email ID, mobile number. So what we need to educate them is log on your tax portal, see what is the compliances. At times, so at least I will give you a very honest statistic. 2 to 3 out of 10 cases, we see best judgment assessments being happening. For the very reason, notice is not served to the NRI. He has not received the same. He has not replied to the assessment proceeding, and officer has passed the order under 144. And then after some time, he gets to know, and then we go into the appeal. So this is a massive thing. So we need to educate the non-resident that, okay, have your email ID, your mobile number updated on the tax portal, so you can have a regular correspondence being received. You need to regularly check, is there any compliance? So even in once in a quarter, if we do, in case there is any notice, there is an opportunity where he can connect base with you and you can take upon that assignment to handle the litigation part. So, of course, given the example 2 years back with the same set of client, if I had 25 assessments happening, as on date, that volume has increased maybe to 100 and 150. So there has been 3, 4 times the fold increase in the notices being sent to the non-resident. And majorly it is just to know the sources of the investments. How did you get the money? So maximum time notices sent for NRE fixed deposits, mutual fund, or real estate investment you have done. So now the concept, the understanding of NRI here is NRE fixed deposit is exempt for us, and why we are serving this notice. So you need to educate why these notices are coming, what is the intention of the revenue, and of course it is not to collect taxes from them, but to just make them understand how did you get this money. So this is how the major notices are being coming in now. Tax audit is of course there, investigation is there. So yeah, so of course, notice is one of the area that you can look upon in specializing in NRI taxation. So of course, there is corporate NRI taxation to it. There is individual NRI taxation. Residency rules are there. What is the taxable income? What are the tax rate? How and what benefit you can take from the double tax avoidance agreement. These are the key areas that an individual can practice upon. There are a lot of opportunities where withholding rate is on a higher side, where you can play an effective role in reducing the withholding tax. Okay. The TDS requirement is comparatively high for a non-resident Indian. There a very good role can be played upon. So if you see, these are the key area that you can play a role where you want to establish your practice as a non-resident Indian tax practitioner. So number one is of course tax residency, disclosure, telling upon the mandatory and the voluntary benefits. If it is important, it is mandatory. There is no other option. You have to file your tax return. What are the voluntary? You can educate them. What are the benefits you get if you file your income tax return in India on the voluntary basis? Repatriation, there is a $1 million scheme. So you can educate them that this money can be taken outside India, how you can take it out. Proper certificates are to be made, 15C and 15CB. Licensing with the bank, educating them how this funds to be transferred. So that role can be played by you. So you can speak to the banker on your client's behalf to do the compliance part. Notice and compliance, of course, we have talked about. Proactive tax planning. Yes, this is one thing where this role play comes in when an individual who is a non-resident Indian is looking back to move to India. So the retirement planning part. So 3 years at least before he should start planning, and when he should move back to India, what are the benefits of being RNOR, how his foreign income can continue to be exempt, how he can keep the money into the forex. That structuring can be done by us as a chartered accountant. What are the documents that he should keep? So any individual who is living outside India moves back to India, and down the line, if he receives any income tax notice on the source of the investment, the first document any income tax officer would request upon is a bank statement of the foreign country. So how many NRI actually keep their foreign bank account statements? The moment you move back to India, most of the time it will happen that your foreign bank account are closed. Getting the bank statement when your account is closed in itself is a very challenging thing. So you need to educate them that minimum what is the number of years you should have your bank statement available, so that tomorrow if there is any litigation, any assessment happening, you should have your records available. So that is where our role as a chartered accountant comes into in educating the non-resident Indian. So now you look at the statistics around. So this is a representational map I have made. Now you see what are the Indian community population around the world. So of course, nearest being Singapore, Malaysia, UAE has almost close to 3.5 million people. Saudi has around 2.5 million. US and Canada put together have more than 8 million NRI population. The reason I'm telling you this population is now you see the number of chartered accountants around and what is the opportunity we have. So, seeing the statistics around the number of chartered accountants as on 1st April, that is the recent publication by the ICI, our strength is 4,22,000. Out of that, only 1,50,000 are into the practice. And considering the NRI population now, you see, there are 3.5 crore non-resident Indians around the world, and practicing, we do not even match on the graph. So look at the statistics now. 1,54,000 chartered accountants who are into practice, and NRI population is 3 crore 54 lakh. So even, of course, the entire NRI population is not a tax-paying SSC, but look at the good ratio. Even if we consider half of them to be having income in India, so I'm not talking about the taxable income or non-taxable income. I'm just talking about having an income in India and the number of chartered accountants. So per CA, you see the prospective number of NRI clients as a potential you can have. So this is the market opportunity that you should be looking upon, considering if you are looking NRI taxation as a area of practice. So what is our role is, of course, we can identify what are the beneficial treaty where we can get into by creating a benefit for the non-resident Indian to take out the advantage of the double tax avoidance agreements. Treaty, what are the updations happening, the amendments that we can educate them. We can have regular sessions for the NRI community where we express upon the do's and don'ts for them. So that is one way of getting the target audience for us. Transfer pricing is one area. So now in itself, this is a very big area. The implications of the BEPS and the global tax reforms. This is one area that you can focus upon. So two acts, of course, you have to be thorough. Income tax, the rules and regulations governing the non-resident Indian, and the FEMA. And of course, the amendments around the same, and the double tax avoidance. These four things you have to be very careful about. You need to be thorough. You need to be nearing to the perfect on the knowledge part. If you have to start interacting with the non-resident Indian, and you have to be thorough in your communication. The attitude that you carry in interacting with them has to be very perfect. So the courtesy, the email courtesy is very important. So if an individual who is a non-resident Indian, my personal experience is if they are writing you an email, they expect an email from you that, okay, I have received your email and I will get back to you maybe in 3 days on the same. And you have to ensure if you are not reverting to them in 3 days, they would be very upset about that fact. So because they are in a culture where they expect the commitment to happen. So in case there is any delay on your part to deliver, what you have to do is very politely you tell them, okay, I was supposed to deliver you this today, but due to the unnecessary or unavoidable reasons around, I need another 2 days. So they would be very happy with this fact also, that you are addressing them and you are keeping them in priority. And what they do is, even if they are interacting with you, they want you to be very particular about the facts and the figures. The attitude, it should not happen that, okay, I will get back to you. ऐसा नहीं होता, वैसा नहीं होता. So you should avoid these things. You have to be very particular, have an email interaction with them, and it has to be very formal engagement, because the area that they belong is, that is how they have been developed upon. So you have to be very cautious about the communication, especially when it is about NRI. So this is what I was talking about, TDS on the property. So if an individual who is a resident of India sells a property which is above 50 lakh, the rate of TDS is 1% and Form 26QB is to be done, which is a PAN based and which everyone is aware upon. But when a non-resident Indian is selling a property, irrespective of the sale value, okay, the TDS rate, which was earlier 20%, now is reduced to 12.5%, and this is done through a TAN-based form, and 27Q is to be filed upon. So a lot of chartered accountants are not aware about this fact, and also the fact that there is an opportunity available where non-resident Indian can apply for a lower TDS certificate by applying Form 13 through the Traces website. So if this is a case of a long-term capital loss, the NRI can apply for a 0% TDS certificate also. Whereas if the gain is on a negligible amount, whatever is the gain, whatever is the tax liability divided by the sale value, AO once satisfied will issue the lower TDS certificate. This is one very good opportunity that you can look forward, and you can educate the non-resident Indian on going with this model by having a lower TDS certificate, and not by declaring themselves as a resident. A lot of NRI comes to me and say that, okay, I have my saving account, I have my PAN card and Aadhaar card. I want to get this transaction done as a resident. So ask the buyer to do only 1% TDS. So this is absolutely wrong thing. We need to come in and we need to educate why this is wrong. And there is an alternative which is better for them. And in fact, right also for them. Second concept is about the TRC, and of late you would be hearing a lot that UAE based NRI can opt for zero tax on the equity mutual fund. So there is a way where they can apply. So the conditions are, this is a provision in the Indian UAE double tax avoidance agreement, that if you are a non-resident based out of UAE, that means to qualify UAE NRI, you need to stay outside India, like outside you, inside the UAE for more than 183 days. You apply for the TRC for the previous financial year. In India, you apply for the 10F and you give it to the fund house so that they don't deduct the TDS. And in case you have not given the Form 10F to the fund house, what you can do is you can claim for the refund of the tax that has been deducted. So this is a very good area of practice which has come up like anything now. So this also can be one area of opportunity that can be created. So income tax and FEMA. So of course, income tax is what we have been talking about. FEMA, which is a more of a regulatory law which governs the transaction, which decides upon the bank accounts a non-resident Indian can have. A lot of NRI are still continuing having their saving account, whereas the provision of the FEMA requires that a non-resident Indian cannot have a regular saving account, and it needs to be mandatorily converted to a NRO account. We can educate them in having an NRE account, how the money can be moved from NRO to NRE, what are the benefits. So the interest that NRI earn in the NRE, though it is an INR account, it is exempt. So we can educate them in moving the funds from NRO to NRE, continue having the same investments done. And the benefit is, of course, there is no tax on the same. There is no TDS question coming in. So, and it is a freely remittable account. And of course, there is another account, which is more of a fixed deposit, which is an FCNR account, which can be holded by a non-resident Indian into the Forex, and multiple currency options are available. So this is one area where you can educate, we can practice as a FEMA consultant to the non-resident Indian. And what are the do's? And of course, I'm not going into the technical part of the subject and the details of the same. But yes, this is a very good area of practice. As a FEMA practitioner, you have a very good potential around. So yeah, this was from my end. and these are my credentials. So this is an hour almost I was talking about on the things that evolve around the NRI taxation. Instead of me talking more, I would now more like to have an interactive where we can talk about the opportunities available, and we can, I think, open the house for the Q&A. I would request you to connect me on LinkedIn where we can have more interaction upon, and also you can scan and connect to me on WhatsApp. This is my personal number, and more than happy. Especially, I would be more than happy to help the young practitioners who have just came into the practice and looking forward to establish their practice into this field. So, yeah, this is from me. And Nitin bhai, I think,
थैंक यू अजय सर।
thank you so
मेरे
much.
को लगता है आज काफी यंग चार्टर्ड्स हैं जो कि अपना फील्ड चेंज करने के बारे में सोचेंगे। मैंने आपका पूरा सेशन लिया, बहुत इंटरेक्टिव था। ऑल्दो आई एम नॉट इनटू एनआरआई टैक्सेशन एंड फेमास, बट आई हैव सम जर्नल क्वेश्चन। माइट ऑल द participants of the webinar also have these questions in their mind. I'll quoting on behalf of all of them. First one, how we can approach to an NRI to be
See,
our client.
correct. So, how you can approach is, of course, I would say number one thing is content is king in this area of practice. So start writing the content around. So of course, you see your inner circle first. How many non-resident you have in your own circle? So your batchmates who were studying with you have become non-resident Indians. You can explore that avenue. So the moment you start writing about NRI taxation in your social media, those friends would be the target point at the first, where they can reshare the same into their community. So this is one area where you can reach to the non-resident Indians. Second is, of course, the media houses. You can write content for a lot of media. There are a lot of websites around where you can create content for them. So when you write your content, of course, your credentials are added. So any non-resident Indian who is searching about a content will definitely like to reach out to you. Second is local media houses also. You can publish your articles in the local media newspapers, which will create a brand impact. People who are not, so like Nitin bhai, you are from Jaipur. If you publish any content in the Jaipur local newspaper, so there are a lot
Yeah,
of people who would be reading about the same and would be sharing with the NRI community based out of the Jaipur. So if any NRI in my family is there and I see an article, I will click a picture and send to the NRI.
definitely. Yes.
The moment he is returning to Jaipur sometime, he would like to see you in person. So that is how appointment is created.
Okay.
So writing a lot of articles and blogs is one thing. Second is you can have a very good licensing with the bankers around. So any bank you see, any major branch that you see has a dedicated NRI banking cell. So that is one area where you can have a very good licensing. And of course, there are various means and mechanisms to reach out to the audience at large.
Okay. Second question from my side is, can you name the countries those have most liberal DTAA agreement with India? So initially the new practitioners chartered can pitch these countries NRIs only.
So the Gulf country is the easiest target, I would say, for any practitioner to start, considering it is as good as traveling to Mumbai. So
Okay.
for me, traveling from, so I'm based out of Nagpur. For me, traveling from Nagpur to Bombay or Nagpur to Dubai is one and the same thing, nearing the same time that I have. And especially the DTAA benefits that are there for an NRI. Considering this is one area which I was talking about, exemption from the equity oriented mutual fund. So this is a very hot area to practice to initially start with. And second, of course, then there is US, which works very good. So considering the NRI population is very good in US and Canada, so with the same efforts, you can reach to the larger audience.
And once we talk about the, you told us that key department is sending numerous notices to the NRIs. In case I am a practitioner and by chance I have only one or two clients as a NRI in my portfolio, then how will we treat them?
So, of course, this is a factual thing. An individual who has been into the conventional practice would have a resident client, which eventually migrates and become NRI, and that is how you get first two, three NRI clients in
Yes.
your portfolio out of 100 clients. in case any NRI is receiving a notice, first of all, the entire India is in your system right now. So with the digitization of the practice, you need not visit the income tax officer in person. So of course, NRI taxation practice is still not faceless. You get to know who is your officer. You can go and meet him, but the submission and compliance is still online. Okay. So
Okay.
you have lot of things around you which equip you to comply to the same practice. Okay. 99% of the time, NRI receiving notice would be to ask for the sources of the investments. So in case you have made a crore of NRI deposit, or if you have bought a property, so the officer would ask, how did you get the source money to get this investment done? So then what you have to do is you have to structure the reply in a way that, okay, you are a non-resident Indian, you are living into the so and so country. You have to establish that you are a non-resident Indian based on the number of days. So you will submit your passport entry, exit details. And then you come on the investment. You tell them, okay, what is the structure of the investment you have done? And then you have to provide for the remittances that you are earning outside India and moving to India. So your foreign bank statement, you have to get to the end of the trail to establish how these investments were made and the money was earned outside India, which is an exempt income. And if you are if you are good in this part, officer is closing your case on the first go. So the
And
question of
last but
reassessment doesn't comes in.
okay, Ajay ji, last but not the least, you told that in many cases NRI do a thing that they filing their returns with their Indian PAN card, even though they are having NRI status in India. Then what are the complications and what the new practitioner pitch them to convince them to go on NRI taxation part?
So even if before I come to this part, so most of the NRI who become like who resident who become NRI, their PAN card still continues to happen in the resident or assessing ward.
Yeah.
Okay. And for individual who have also taken the Aadhaar card, most of the NRI PAN card have been made inoperative. So they are absolutely not aware with the fact that their PAN card has already been made inoperative. For the reason that if you have an Aadhaar card, it is mandatory for the same to be linked to the PAN card.
Yeah.
Exceptionally, you have not taken for an NRI Aadhaar card. So if you are resident, you have Aadhaar card, it is important that you link with the same. So that is where one should educate the non-resident Indian in the first go to check what is the status of your PAN card. It is operative or inoperative. If it has been made inoperative for the reason it is not linked to Aadhaar, you have to do it. Alternatively, you have to go to the AO, you have to write to them, submit the proof that you are a non-resident Indian based on the 4 years of your passport history and make the PAN card operative. This is the number one thing that you should do. Second thing is you should update your profile in the tax portal as a non-resident Indian. You should have your email and mobile. Of course, foreign numbers don't receive the OTP. So as an alternative, you should have a secondary number, which is an Indian number, where any communication, if it comes, it should not be missed upon. Because I told you in the example, how best judgment assessments are happening. Unnecessary chaos is being created where you go for appeal, then you pay the 20%, and this is unnecessary concern for the non-resident Indian. They hardly come for 1 month to enjoy their vacation, and in that 1 month, and if they are under the stress, that doesn't sounds good for them. So you have to be very cautious on those parts, and of course, educate them in the first go. The basic thing to educate them is about the TDS, which I said, that why you should be filing your income tax return in India, and when it is not mandatory for you. So if any Indian, any NRI has a dividend income, it is taxable at a flat rate of 20%. It doesn't go as per the regular resident provision. I have seen a lot of returns where dividend has been put into the slab rates and put to tax. So that is a wrong practice. Second, if you have maybe only a capital gain income, which is well below the basic exemption limit. So for a non-resident Indian, the basic exemption limit doesn't come into. So even if you have a nominal capital gain of short term like 10,000, 20% tax you have to pay. It is mandatory for you to file tax return. Number thing three is TDS part, which we have already talked about. Number four is, of course, you have more financial transparency in place. You have your records in place. You are documented. The day you plan to come back to India, you would be having a legacy of your financial transactions. You are much more in order. You are compliant with the paperwork which is required. Another benefit that I see for a non-resident Indian who doesn't have a taxable Indian income in India to file for return is when he has a loss, to carry forward the loss for 8 years. So it is important that you file your income tax return before the due date. So this is one other opportunity that you should create and educate the NRI that if you have any loss, of course, income tax is not asking you to file any return, but if you file your income tax return in India, that these are the benefits that you can look upon. So there are a lot of equipments available where you can take and go to the non-resident Indian and educate them and convert them to be a compliant in India, and that is where your client is converted upon.
Okay, great, sir, and great for your session. And hope every member who joined today's webinar will start their practice into NRI taxation and FEMA as well. Thank you. Thank you, Ajay sir. Thank you, ICI and all the committee members and tech team. Thank you very much.
Thank you once again for this opportunity. Looking forward to stay and connected to a lot of members across India. I think I have a lot of members abroad also from joining in today. Would be more than happy to interact in individual capacity with everyone. Looking forward to connect on LinkedIn and WhatsApp. And thank you to the committee. Thank you, Nitin Bhai, for moderating this session today.
Thank you.
Thank you.